All right, what is up, everybody? My name is Arman Vakili. This is the Stock Split Show, the show where we talk about stocks that split. And just in case you have no idea what that means, a stock split is when a company divides the existing shares that they have into multiple new shares. So what that looks like, and the reason why they do it is because of liquidity. They want to increase market cap, market share, etc. And what happens is that even though it actually splits into multiples of the same stock, the actual value of the account stays the same. The value of the portfolio stays the same. So typically it's 2-to-1, 3-to-1, sometimes it's 4-to-1. And if it's a 3-to-1, the before the split looks like this, right? You would have 2,000 shares as a hypothetical. You have 2,000 shares at $300 a share. After the split, each one of those shares splits into 3 because it's 3-to-1. So your 2,000 turns into 6,000. But in order for the value of your portfolio to stay the same, the $300 a share turns into $100 a share. So if you multiply those numbers, they equate the same thing. They equal the same thing. 2,000 times 300 is the same as 6,000 times 100. So why would a company do this, right? Why does a company do something like this other than wanting to achieve liquidity for their stock? Maybe it's because they want to increase their market cap and their overall market value, market share. Maybe they want some free publicity so that it gets announced that the company is doing a stock split so that they attract new investors and potential investors into the company. And really, if you think about it, before these apps that were around that you could buy portions of a stock, you would have to go to a broker and actually buy an entire stock, like a whole stock of a company. You couldn't buy pieces of a stock. So a company would do this typically because they want to allow new investors that don't have as much capital, to still enter the market and actually still purchase these shares because they've lowered the price per share amount. And usually, not all the time, but relatively often, after a split is done, the value of the company increases, so does the price per share. So now we're going to look at today's example, which is Home Depot. So everybody has probably heard of Home Depot. If you haven't, then I don't know what to tell you. You got to Google their name. But Home Depot is a home renovation and remodeling supply store. Like, they basically provide the raw materials that you would need to either build something from scratch around the house or actually renovate your house, or make certain changes around the house. So anything that has to do with the home, right? Out of all of the stocks that we've looked at thus far in this video series, this one has had the most splits, and it's 13 times. So the Home Depot stock has been split 13 times ever since the company has gone public. Started in 82. And so January, May, and December of 82, there were splits. They had a 3-2, a 5-4, and a 2-1 split, all in 1982. Then in 1983, there was a 2-1. 1987, there was a 3-2. In 89, there was another 3-2. 90, there was another 3-2. 91, another 3-2. 92, another 3-2. 93, there was a 4-3 split. 97, there was a 3-2 split. 98, there was a 2-1. And 99, there was another 3-2 split. So this has been the most actual, like the volume of splits that has taken with a company. This is the biggest one so far, with this 13 splits that's happened with Home Depots within their history. So now let's look at what this actually kind of has done to the value of their stock and their overall market cap, right? So if we were to look at it again in 81, that's the earliest that we can go. And 20 cents per share was 2 cents per share. That is insane. So it was 2 cents per share, and their current value is 283. That's pretty crazy. So 2 cents per share, that was in 81. Their first split, or the first 3 splits, happened in 82, right? So you have January of 82, that was at 4 cents. May of 82, they were at 5 cents. Whew, big money. And December of 82, they were at, where are we at? Let me see. December of 82, they're at whole 16 cents. That's actually, when you look at the percentage of growth, that's not bad, right? It went from 2 cents to 16 cents within the year. And then you have June of 83, then in 87. So we have June of 83, there was another one. That's pretty crazy. So 39 cents. It's been like, they've done a lot of splits. So June of 83, there was another one. So there was another one in 87. So now we get to actually skip a couple of years and go to 1987. So around March of 87, it was still at 50 cents. So it's still pretty much like a flat line for towards the beginning, up until their 1990 split, where it kind of ended up picking up a little bit in 1990. And then you have 91, 92, 93, and then we get to 97, that there's another split that takes place. And now they're picking up a little bit of traction, right? The value of the stock has gone up to 1140. And so we have 98, which was another one. And then after 98, the only other one was 99. So they stopped at 99, where the stock value was at around $38, let's say around $37. And so 2000 and 2001, this was the Y2K. Obviously, the Y2K crashed. We went to 2001 was the Twin Towers and the war that began with Iraq and with America. So this was one of the bigger market crashes that happened between the 2000-2001 timeline. And then you look at what happened in the dip right after that timeline as well. It's been a pretty strong dip that they had between the year of 2000 to 2003. So they suffered a pretty big loss. And around the time that the mortgage bubble was building, they didn't really have much of an increase, which is actually pretty interesting, because around that time there was a lot of people that were buying properties and going into real estate, but I guess not too much renovation was taking place, or not too much construction was taking place. And so their stock kind of suffered even for quite some time, actually. Like after their last split, their stock took a pretty big hit for like a good 8-9 years before it started picking back up and readjusted itself to where they were in 1999, because in the peak of 1999 they were at $65. So it took some time for them to actually recover and get back to where they were. And you have what? It took over a decade for them to get back to where they were. So from 1999 to 2013, they were on a fairly poor performance. And 2013 beyond, however, has been drastic increase for these guys, and even including the dip that happened in 2018 for them, and of course the dip that happened for the COVID-19 pandemic in 2020, these guys still have recovered, and they've gone up to $270 per share as far as the value of the shares are concerned. Now, it's pretty interesting because over the last several years, the real estate development market, the remodeling and construction market has actually taken off in the United States, and there's been a lot of people that have gotten into real estate development and construction, etc. So companies like Home Depot, and I think their only other competitor might be Lowe's. So Home Depot is the biggest for this particular market, and they've done very well for themselves as people are getting more and more into real estate. And it's really interesting because the inventory in real estate is now low. There are way too many agents available for each property. I think it's something like 12 licensed agents are available for each property that's available for purchase or sale in the United States. So inventory is drastically low, which makes companies like Home Depot pretty strong, because as more agents get into the real estate game, as more investors get into the real estate game, they need to develop more properties. They need to build more properties. And China has like destroyed us as far as construction and development is concerned over the last 5-10 years. The amount of cement that they've poured over the last 5 years is something like, I think, 10-20 times what we've done in the United States in the last 5 years. So they've been developing in construction very, very heavy. And that's something that's available to the United States as well, because there's a lot of land in the US. And I do understand that there are the major cities. So there's the East Coast, the West Coast, and then there's the southern cities that are these major kind of metropolitan city areas. But then there's so much other land in the United States that can be developed, and it's available for investors to invest into, that it's actually pretty interesting what I think is going to happen in the real estate market in the next 15-20 years potentially. I don't know if it's going to be a short-term thing, because there's still there's a lag in time in the amount of money that's invested and then the buildings being up or the houses being up. So there is that construction time that still needs to be addressed. But over a span of 10, 15, 20 years, I think the real estate market, and it's always been like a really strong investment option anyway for a lot of people. So real estate is going to be this evergreen thing. And as a result, the companies that support real estate, like Home Depot, companies that are into home development or remodeling or construction, are going to benefit from that as well, because they are providing the raw materials that goes into things like that. So that was kind of a long-winded response to why Home Depot has actually had the increase and the gains that they've had over the last several years. But it's pretty interesting to consider. It's like something when you look at how markets are connected to each other and how companies connected to each other, and how it actually affects the value of the company and the value of the stock as different industries or companies take a hit. It's really interesting what this whole dynamic of the integrated philosophy that these guys have with each other, the kind of like the correlation, the correlation that they have with each other and how they affect each other. So this is the stock value that we looked at for Home Depot. Now, as usual, let's go look at the Home Depot market cap since 2005. So 85 billion, 90 billion actually at the beginning of 2005. So it is one of the stronger companies that kind of started there. But as you can see, the dip that happened because of the mortgage bubble bursting in 2007, 2008 really impacted Home Depot. But ever since that dip, they really haven't had anything that's been that crazy, with the exception of what happened in 2018 and of course what happened in 2020 with the pandemic. So the 2020 pandemic hit everybody. It's not something that only affected one or two or three companies. So this era is actually very interesting. But again, as something like that happens, when you look at how companies recover after something like that takes place, it gives you a real insight into the actual strength of the company and their ability to overcome tough times and then bounce back. So when you look at what happened in 2008 and their net worth dropped from 92 billion, and it dropped to 39 billion, and then going from 39 billion to 290 billion since 2010, that is really, like, it says a lot about this company. It says a lot about the leadership of the company. It says a lot about the actual value that they provide to the marketplace and the need that people have for the products and services that they sell. So really interesting company to look into, and very similar to Procter & Gamble. It's one of those companies that, because of what they sell, the materials that they sell, they're going to be evergreen until we probably either run out of resources on this planet or we move to a different planet. So it's actually really, and I'm pretty sure Home Depot will probably move to Mars and everything anyway. So really interesting company to look into. Obviously, I am not a licensed advisor, excuse me. I'm an insurance broker. I'm not in the securities business. So I do recommend that you guys go ahead and do your due diligence or speak with a licensed securities advisor before you make purchases into stocks, right? Got to make that disclosure. But at least do your due diligence, do your homework, and look at companies like this, companies that actually provide raw materials or provide the kind of materials that really feed different industries, like battery companies or home development and home construction companies. They feed a lot of different industries. So really interesting stock for you guys to look at. If you guys want more stock splits, you can pull up the calendar of stock splits that are available on a monthly or an annual basis, and you can actually see what other companies are doing these kinds of splits, so that you can research them, see if it's something that you want to hold on to on a midterm to long-term basis. Not really a good strategy for day traders, because they consider a lot of different variables, and splits aren't necessarily one of the things that are used in day trading as a variable, but you can also consider it in day trading as well and make moves around that as well. But if you have any questions around this particular topic, please let us know. Leave it in the comments section, or obviously you can DM us on the different socials that we have. But we'll try to address all of your questions either within the comments or in future episodes. So looking forward to hearing your feedback, looking forward to reading your questions. And this was our today's episode of Stock Splits. My name is Arman Vakili. I hope you guys enjoyed it, and I will see you in the next episode. All right, later.